Hello everyone, this is Dana from NexGen, and I hope everyone is having a fantastic week thus far. Today in our series for retiring at any age, we want to take a look at managing financial risk. And what do we mean by that? Well, we're talking about protecting our income, savings, investments, and lifestyle from unexpected events. So we want to take a look at some strategies that we can use to manage financial risk. Well, the first one, which is not a surprise to anyone, is we want to build an emergency fund. Now, when we talk about building an emergency fund, we're talking about saving 6 to 9 months worth of essential expenses. So it's not 6 to 9 months of income, but essential expenses. Because if you lose your job or anything like that, hopefully you're not trying to live at the lifestyle you were at the time you were making or having that additional income. So this is why we talk about essential expenses. So the reason why we want to build an emergency fund, of course, is again to cover any type of job loss, medical bills, urgent home or car repairs, and we want to have this money set aside in a different account or even in a different bank or credit union altogether. And we want to have this fund because we don't want to go into debt. We don't want to use our credit card and have to pay the money back. So this way we can just tap into it if we need to cover any type of essential expense. So with that, we want to make sure, as I just talked about not putting all your money in one area. So whether you have stocks or bonds or cash or anything like that, you want to make sure you spread it out. Your stock portfolio. Now, I talked about this some in previous videos, but you want to make sure that it matches your goals and your risk tolerance. And of course, when I talk about cash, we're not talking about having it necessarily in one financial institution because you never know what may happen. So you want to diversify your investments, and that's what we're talking about. In addition to that, we want to take a look at getting the right insurance. Now, what insurance are we talking about? Making sure that you have the appropriate health insurance, and that's to protect you and your family against any type of catastrophic medical bill. Disability insurance, and that is to protect your income if you're not able to work due to an illness or an injury. Of course, there's life insurance that provides care for your dependents if you should die unexpectedly. And of course, we want to make sure it's appropriate, and we review this on a regular basis. Of course, there's home and renter's insurance, depending on your situation, and they cover your property damage and liability. And we talk about that in the Me Inc. series. Auto insurance, and that's to protect against accidents, theft, or damage. And then for those that need extra liability protection, we have what they call an umbrella policy. So we want to make sure that we get the right insurance that meets our needs. And of course, throughout the years and depending on the event, it could change. Life events could change. So you want to make sure you visit your insurance on a regular basis. And you want to limit and manage debt. If you can at all possible, you want to avoid high interest debt, especially in the areas of credit card balances. And again, in the Me Inc. Monetary Education series, we talk about managing debt. And you want to use it for things that appreciate in value, not for things that you consume, if at all, if you have to. And while you're managing debt, you want to make sure that you maintain a good credit score. And the reason why you want to maintain a good credit score is because the better your credit score, the better interest rate and loan terms you can receive. For example, if you're in the market for buying a new vehicle and you don't want to pay cash for it, some institutions offer 0% interest on whether you're buying a car if you maintain a good credit history. So those are things that you want to take a look at when you're managing your debt. Now, to do this, you want to make sure that you're living below your means. And what do we mean by living below your means? Well, you have to know what your what's coming in and what's going out. So you want to make sure that you're tracking your spending to make sure that you're saving and you're not overspending. Well, how do you know you're doing that? Well, this is where the word budget comes in. So it's allocating your expenses to the things that you need where you need it to go. And by budgeting, this will cut down on lifestyle inflation. And what do we mean by lifestyle inflation? Now, normally, for example, if you're working somewhere or if your income increases, sometimes your expenses increase right along with it. So you want to make sure that's controlled to where if you do have an increase, you can possibly move that into your savings. So you want to keep track of your lifestyle by living below your means and by making sure that you have a budget and that you are always reviewing it and making sure that it meets your needs. And of course, this comes with planning major life events, like whether it's education for yourself or your family, any weddings, a home purchase, or as we've talked about, retiring at any age, retirement. Now, the earlier you start, the better it will be for you, and it'll make it very easy to save regularly because you're doing the planning. And of course, when we're doing this, we want to use things that are tax advantage. Now, we talked about the 401k, the thrift savings plan, the health savings account. We talked about that in previous videos. So definitely take a look at the monetary education series. And we talk about some tax advantage accounts and strategies you can use to help with your major life events. And with that, we talk about estate planning. And with estate planning, we're looking at wills. And this is where you have a will, you're making sure that your assets are distributed according to your wishes instead of the state's wishes. So if you don't have a will, and I'm talking to the people in the United States, if you don't have a will, the state actually has a way to distribute your assets, and it may not be in a way that you want it to be, so that you want to make sure that you're taking care of your loved ones. And also, since the will is after you pass away, you want to make sure that you have a power of attorney and a health directives for you, and this is where you can ensure that someone can manage your finances and your healthcare decisions if you're not able to. So that's why you want to make sure you have these things in place. And you also want to keep your beneficiaries updated on all accounts, on all of your accounts. Now, one of the things that we hear about constantly is when someone has a change in their family, and they didn't keep up with the beneficiaries. For example, a life insurance policy that went to a former spouse when you actually meant for it to go to your current spouse or the person that you married afterwards, or different things like that. So you want to make sure that you revisit your estate planning on a regular basis, and definitely if you have a life event. For example, if you have an additional child, you want to make sure that they're taken care of as well. And with that, we also talk about my favorite thing, which is tax risk management. And this is where you understand the tax bracket you're in and also taking a look at the deductibles. Things change all the time. So you want to make sure you optimize your income and your investment. and you want to use tax efficient investments, whether it's be municipal bonds or index funds that are in taxable accounts, or some bonds that are not taxed. So you want to take a look at that. And if you're unsure about it, there are plenty of tax professionals that can help you on with the complex income sources or assets. So there's tax risk management. And as I've been saying throughout, you want to monitor and review regularly, whether it be your insurance, your budget, goals that you may have, and checking the performance of your investments. And we want to do this because there's life changes like a new job, marriage, or having additional kids that may require strategy shifts and adjustments. So we want to make sure we monitor and regularly review. And last but not least, we want to make sure that we avoid emotional decisions, proper planning, because we don't want to take any, like for example, if the market dips, and we don't want to go into a panic because volatility is normal. Market volatility, it goes up and it goes down. So you don't want to panic when these things happen because it happens on a regular basis. And you want to have a plan to where you have it written down so that you can take a look at it and stay financially grounded. So these are some of the things that you want to do. So in review, we're talking about building an emergency fund, diversifying your investments, getting the right insurance, limiting or managing debt if you must have it, living well below your means, plan for major life events, estate planning, tax risk management, and you're monitoring this and reviewing it on a regular basis, and you're avoiding emotional decisions. So these are the financial risk strategies that should help you when you are retiring at any age, or even when you are already in retirement. These are some of the things that you still would need to do. So hopefully this information was beneficial to you. Congratulations to NexGen on their 5 years on their YouTube channel. And I will talk to you next month. So have a great rest of your week.